Hi, this is Dave with Market Trading Concepts. It is Saturday, May the 5th, closing out the week for Friday, May the 4th. Hope everybody had a good trading week. Let's start off with the Dow. It was kind of a crazy close into the end of the week. Looking at the Dow from the both the intraday perspective and the daily perspective, I mean, you can see here on the 5-minute chart, we sold off all day long, and then we actually broke this key level here at 12,970. This was a level that I was looking at as possible support intraday, and we ended up breaking that level there and closing right at the lows. You can see, these were pretty decisive closes right at the lows. I think we closed at 12,952. So that was a pretty crazy day, a pretty crazy close, but was it a game changer? Still not sure about that. What I am sure about is that some key levels were violated. Now, let's take a look at the daily chart and just expand it out. And this is what I was looking at last week. And I apologize if memory doesn't serve me that great. I haven't reviewed last week's video before making this week's video, but I was looking, if I recall, I wasn't interested in this move here. In fact, this move was a retest of this level, but I was looking at a push higher. So when we broke the top of this wedge that was in play at the time, okay, this wedge here, what I was looking at was a break of this level here, 13,091, so 13,091 here. I was looking at a break of that level to go higher in the market. And that did play out. What ended up happening was we broke the 13,091. We came right back to that level and we tested it overnight. You can see that coming into play here. Okay, let me just clear this off. You can see it coming into play beautifully here. This was a level that, this wasn't a hindsight level. I think we had it I tightened it up a little bit. I think it was 2 ticks lower at 0.89, and I just changed it to 9.1, but it was on our chart as 13,091 or 89, and I changed it to 91 just to get, I thought it was a better level. It was only 2 ticks difference, not a big deal. But that wasn't a hindsight level. That was a level that we were looking at to break through during this day intraday. Okay, during this day intraday, and then what ended up happening was we came back and we tested it, within 10 ticks, and then what happened was we held that level and it got accumulated up and we bounced, and then we went a little bit sideways. But what I was expecting was this to happen. I was expecting this retest to happen, and you can see here were the highs. We actually probed above the highs quite a bit. That could have been a mini stop run. Okay, that could have been a mini stop run. In fact, let me just draw a line here on the chart and see how high exactly we went. Horizontal line. So we hit around 13,281. So we came through that level about 40 ticks higher in the Dow Futures. Okay, so we were looking at 242. We went up to 281. Maybe a tick higher. That was about 40 or so ticks higher. So that could have been a possible, mini stop run, or that could have been people getting on board the long side at the wrong level at the high there. So that was what we were expecting to have happen. Now, what we weren't expecting to have happen, it's not uncommon to get a pullback from that level, an orderly kind of pullback from that level. So fast forward to Friday, and we were not really expecting this to happen. What we were expecting was maybe a pullback to this trend line, or we're looking at it in stages and looking at it in levels, or we're looking at a pullback to this breakout level at 13,091, and it failed this, and it failed this, and then we were looking at maybe a pullback to the 20 EMA, and when it hit the 20 EMA, I didn't really like it because we were getting, the price action was such that it hit the 20 EMA, and it bounced only a little bit, and it came back down to test it, and it was hanging out down there. So I wasn't intraday, I wasn't liking that price action. Okay, and that's something that you have to judge on a as it's happening on a price action basis. I didn't like that price action, and then what it actually ended up doing was, looking at some of my intraday charts, it actually came down and it tested the 35 period moving average, and then it tested the 50 period moving average, and it failed. It failed miserably, both those levels. So this was something that I was looking at and saying, well, something's not right here. Okay, something's not right here. Now you have this sort of trend line coming into play now from these 2 points. And the question now is this a game changer? Is this a game changer? Now we still have pretty strong support, in and around these levels. 12,970 was the level that I was looking at it to hold, ultimately hold intraday on Friday. And we ended up closing 22 ticks lower. Okay, 22 ticks lower, which, in and itself isn't the end of the world. It hasn't necessarily cleanly broken that level, but what I would like to see is these lows coming into play here. I'd like to see it hold these lows. If it comes all the way back down to 12,800, I'm not really liking that kind of price action. It doesn't mean that the uptrend is done, but what it does mean is maybe we're setting up for what was looking like a potential move higher. What I was expecting to have happen was do one of these and then break to new highs. What is now looking as a potential double top. Okay, this is looking as a potential double top. So I'm not liking that this potential double top situation because it is against the trend and it's a little bit tougher to trade. So what I was hoping for was a trend resumption, not a kind of reversal and fail scenario, because those are always a little bit harder to trade. At this point in time, it would be a counter trend trade. So I'm not really liking that. Now, is it over for the Dow or for the indexes? Not necessarily. One of the things that I considered was that, we kind of the market showed its hand here when it pushed above, initially here, when it pushed above this level, and then when it retested the highs. And what I'm thinking is this may be an exaggerated move where, the market likes to move in the, not necessarily the correct direction, but the intended direction with the least amount of participants on board. So what I'm looking at this point to see if this is the intended direction, if it does want to go higher, but it's shaking everybody out of the move, and then once it shakes everybody out of the move, if it's going to resume the direction that it wants to go, or if this is going to be a failure point. So at this point in time, I'm still not interested in the short side. What I would need to see have happen is this is what some of the people that I follow, like Rob Hoffman, this is what he calls a one-bar break. So we had a one-bar break of support. If we had a follow-through on Monday with a two-bar break of support, where the we close close to the lows, then this would be a heads up to me. And a break of support where we close close to the lows, this would be a heads up for me that maybe the uptrend is in trouble. But we don't have that. You can even see the situation come into play back here at 12,652, where we clearly broke support here, one bar, and then the next couple of bars came higher and higher, and I said if we break above the high of this bar again, then we're probably back off to the races. And you can see it did that, came back down, retested, and then it kind of moved higher for a while. Now, but what we're really looking at, and I'm going to spend a little bit of time on this today because I think it's important. You really have key support, the major support down at this level. Okay, this 12,652 level. This is a key level, and in my opinion, this is a key level. So what I'm looking to see is if we push lower, I think I really wouldn't be interested in the short side until we ultimately failed this level, 12,652. And that is, over, let's see, we're at 952. That's 300 Dow points away. So what I'm actually looking for it to do is hold this huge zone, okay, hold this huge zone and see if we're going to push to new highs. If we fail this zone, then from a swing trading basis, I'd be looking at maybe the next retracement to get short. okay, like a break of this level and a pullback with a potential resumption of the trend to the downside. At this point in time, it's just a really tough area to trade because, I mean, we were expecting this to happen right here, but what we weren't expecting was this. So now the question is this the shakeout before we move higher, or is this a game changer and we're going to actually push to lower levels? Well, until we break this level, I don't think that's really in the cards. I think that we really need to see that happen before we get excited on the short side. At this point in time, I'm not really excited on the long side either. I'm kind of in neutral market bias mode. Now, one of the things that that we were talking about here in the Market Trading Concepts trading room, specifically Jason and I were talking about, Jason being one of our members, is that it's really tough to trade. It's really tough to trade when you get up to like key levels like this. Like in these zones here, one of the things that we started talking about was that when you're catching, for example, and I'm just going to backtrack so that I can illustrate the point. When you catch, I guess what you could best term the meat of a move, where let's say you're in an uptrend, when you're in a clear uptrend, let me just change this to green. This is a more orderly market move, and these are more orderly markets where the market is grinding higher. You have pullback days, it grinds higher, you get a pullback, grinds higher, pullback. These are more what we consider orderly markets. This is the meat of the move. This is the major trend, and ultimately it just keeps going higher. Now, fast forward to where we're at now, and you can see that these kind of ranges here, where you get a high in place and you get intermediate support, these areas are much harder to trade, especially up and above these ranges, up in here, because this is really where you get people, these are areas where the rubber really meets the road, where you get people that are betting heavily on the short side, and then you get people that are betting heavily on the long side. So you've got breakout traders here who are looking for it to go long, and then you've got kind of counter trend traders here who think this is overdone and they're looking for a push lower. So those major areas where you can expect if you imagine you've got a tug of war between you've got the longs over here, the shorts over there, and this team is pulling this way and that team is pulling that way. These kind of areas are much harder to trade. I think what you have is just a major tug of war going on, and you get a lot of whippy volatility in these areas. And I think that when you see that and you've got it pegged that it's just hard to trade, there's nothing wrong with just stepping away from it and just letting it kind of unfold, break the key levels, resume the trend, and get back into the more orderly markets and the more orderly trends. Because when you're trading near potential tops or bottoms, you really get a lack of market structure. You get a lack of orderly markets. You get a lot more volatility and herky-jerky action, and it's just a tug of war between buyers or people that are accumulating and sellers, people that are distributing. So Jason and I had a pretty good discussion about this, and it was something that when you're not sitting with other people and vocalizing, you just recognize that it's really a tough market to trade. But when you kind of sit there and put your ideas together, put your experiences together, and you start to vocalize it, you really start to rationalize it. And I mean, Jason explained it a lot better than I did. I'm putting it into my words, but his explanation was really a good explanation too for why we get this kind of market action in those areas. So I think this is something going forward that I'm specifically going to be paying attention to, insofar as the fact really is that there are certain areas in the market that are just harder to trade than others, and to recognize when you're in those zones. And this is something that I'll be adding to my trading plan and that I'll be trying to be cognizant of in the future, just to watch those areas that are tougher to trade, and to modify my plan or to modify my trading accordingly within those areas. So make a long story short, I'm really cautious at this point in time. Let's take a look at the markets for, from the Darvas squeeze perspective. But from, a reversion to the mean type perspective, I don't like how it's broken the key 20 period moving average. This is my line in the sand between long and short. Here I'm long. I'm interested in longs. Here I'm interested in shorts. But at this point in time, I'm not interested in shorts because it's against the trend. So, long story short, I'm just really cautious on this market. I'm going to give it a few days to prove itself out and see exactly where it wants to go, heading into next week before I really, develop a new bias on the market. It really needs to prove itself out at this point in time. Okay, let's take a look at the Dow Futures from the Darvas squeeze perspective. So if you look at the weekly chart, we're still basically in this big weekly range, and the only thing that's really telling here is a heads up that the MACD is overdone. Okay, we had some areas of weakness coming on the Heikin-Ashi, but the weekly chart isn't really telling, except that we're in this huge range between support and resistance. Between 12,663 and 13,240, 250. So we're just in that huge weekly range. So I think this is really the only heads up that we might be that we have some weakness coming into play, aside from the price action. But if we jump over to the daily chart, which I think is a little bit more telling, and let's expand the daily chart out here. What you're really looking at here on the Dow, at least, is we've got some fibs drawn on here from the other week, and you can see that what we did was we really came down from this, I believe it was this high. I think the fibs were drawn from this high to this low. What you really have happening here is you have a move from this low to this high, or this high, which was almost the same. You came up here and then you pulled back into the 50% zone, and then you pulled back into the 61.8% retracement zone. Now, because I think I drew the fibs going from the high to the low, these zones are actually backwards. So this actually should be 50, and this should be the 618. But the levels will be roughly the same. So now what you really have is a bit of a clearer picture from a Fibonacci perspective, at least, that you're right at a key line in the sand between long and short. So, so goes the theory that if you do a 50% retracement to a 61.8% retracement, and remember these are reversed, that you need to really hold this level in order to stay on the long side. So we'll be looking to see, and you can see it's interesting how this really coincided. You've got this kind of trend line coming into play where you can attach these 2 points, and this third point comes into play beautifully. And then you have this, the market closed right at its lows, right at this line in the sand. So I thought that was really, really interesting in terms of, it's going to mess the most amount of people up really going into the close of the week. So what you really want to see next week, you want to see it hold this 12,950 level and see if it's going to hold this level from this perspective and see if it's going to push higher or not. So if we actually start getting closes below this level, I would be very, very cautious. But we have to really break some levels down here in order for me to get interested, at least on the short side. You have a red Heikin-Ashi coming into play. Here it looked like you had support at the zero line of the MACD, and then we were starting to roll higher, and now we're just kind of the two lines are just coming together and kissing themselves. So that's not really all that telling. That could resolve as a crossover, or it could resolve as a bounce and a move higher. So from this perspective, I think you've got some key levels to work with. 12,950. See if it holds that level, and then and then really go from there. Give it a couple days to prove itself out. Okay, taking a look at the S&P futures, the ES contract. So on the weekly chart, you're kind of in the same situation. Although I think the Dow is the strongest index from a chart pattern perspective, and from the perspective of, it retested its highs, and I don't think the other indexes did. I can see here the ES didn't. But what this is kind of looking at here is this might be a potential lower high put in. And this is a pattern that I'm noticing more and more on different chart time frames, where you get a high, you get a lower high, and then, this is your kind of signal that, heads up, it might be going lower. You can see it a little bit more prominently too on the daily chart. Let's just expand that out. So this was a really tough area to trade, because you can see that coming into play now, where you had, this area, and then like this is starting to look like a lower high now, right? So this area here, if we break these support levels, then this is going to put in a lower low. So from a chart structure perspective, you've got the potential beginnings of a downtrend if that comes into play. So I'm cognizant of that. Where it was really confusing is, you really need to hold these lows in the S&P, and then we had this Darvish squeeze long fire right in this area, right, when it broke this box, and I thought we were going to get a retest of these highs, and with the Dow futures being stronger, I thought that would push the Dow to new highs. Now the Dow did hit new highs, but it failed those levels. It hit new highs of around 40 ticks. Intraday, it came off those levels, and then it started to roll over. So, you've got the same situation here, where the MACD was finding support at its zero line, and it was starting to move higher. So what I think you need to see now, you need to see it hold these levels, or you need to see if this is going to become, a lower high, and we're going to push lower. So this is really a tough spot to be in, and I wouldn't want to have to make a decision in this area. Now what you are seeing coming into play too is the momentum. Technically it's not momentum, but it's the easiest way to describe it. The histogram of my trending indicator is going lower. So that's kind of a heads up. It's significantly lower than these peaks. So at this point in time, the only thing you can really do is be cautious, and you have to say, okay, where are my decision points? To me, my decision point is a break below this support level or a break above this resistance level. All of this huge range in here is really the dead zone. Okay, this is really, in my mind, at this point in time, because it's a 50-50 trade, or even less, because if you get volatility in here, and we start going sideways, but we start testing the top and bottom of these ranges, you could get some, explosive moves higher and lower. So this to me is at best a 50-50 trade zone. This is the dead zone to me. I don't like this area. I'd like to see some direction outside of this entire area to be actionable. Okay, let's take a look at the Nasdaq. The Nasdaq is looking a lot more negative, and you can see here, let's take a look at the weekly chart. The weekly chart looks like it's ready or set to test its 21 period moving average on the weekly chart at 2576.95. Okay, so 2576 roughly is where it sits now. You can see it was a really not bullish, a really bearish close on the week, and I don't think it would be unusual for it to, it closed at, let's say, 2,625. It wouldn't be unusual for it to come down to this level. What is that? 25, almost 25. Let's call it almost 50 points lower. So you've got potentially 50 points lower downside in the Nasdaq. So this is if it doesn't hold this level. So looking at this from a multi-time frame analysis, here's the weekly chart. Looks like it wants to test this level 50 points lower. If you look at the daily chart, which I'm just going to expand out here, this is starting to look a little bit more telling, where you've got this you had this kind of trend line into play. You got kind of a fake out. You've got a Darvish box forming here. Now you've got a Darvish squeeze setting up here where it closed right at the bottom of this range. So what you really want to see here is you've got a red Hakanashi, You've got some support coming in at the MACD 0 line. This is still technically against the trend, but it wouldn't take much to get it to roll over. And I think what you really need to look at for guidance here is this is pretty strong support, right? You can see these swing highs, and then it broke through this swing high here. This is a key level from a support resistance perspective. Came down here, tested this level, popped off. Okay, and now you can see it coming back down, and it's right at that level there, right close to the close. So I think what you would need to see, I mean, I would personally, from a trading perspective, I would be comfortable, for example, looking at this and saying, okay, you know, the Nasdaq was leading for a long time the way up, and then it looked like the Dow started, you know, becoming stronger, but maybe the Nasdaq is leading on the way down. Here's a key level here. Yep, I drew that by hand. And what I'm looking at here is, you know, a potential lower high. This is what it looks like to me, right? A lower high here on the Nasdaq. And if we break this level here, what I'd be looking for is a break, a retest, a failure, and a rollover. Okay? Or, you know, I mean, if it's a strong market, it's just going to go. But normally in the indexes, you know, they're more two-way markets where you're going to get, you know, some kind of retest, probe, failure. So when I see something like this coming into play with a potential Darvas squeeze, if the Darvas squeeze fires to the short side, then I think that's really going to give me a heads up that maybe the stock indexes are short-term overdone, and that we'll get a move at least, you know, the width, half the width of this range, or the full width of this range. Okay, so here's a half, say a half, and here's, you know, a full. Okay, so so that's really what I'm going to be looking at in the Nasdaq. I think it makes sense here to look at the Nasdaq for some guidance. It's a little bit weaker, I know, but if the Nasdaq goes and the other indexes start to break support, I think it's going to be very telling. Okay. Now, on the converse of that, what you really want to see, and what you really don't want to have happen is you get a probe below this level and a fake out, and then it rips to the high side. Because people who get short and get caught on the wrong side of the market, in this instance, if the market, let's say, wants to go higher, but it wants to trick people and get them in short, they're going to add fuel to the fire on the way up, because they're going to be the first ones that, you know, they got in at the low tick, and then the market pops higher. So this is you have to be really careful in this area, and you really need to see a decent clean break of that level before considering, you know, getting short. And if you are going to get short, then, you know, use tight risk parameters, because you really, you know, these are key levels. These are key levels, and you never really know what's going to happen. Okay. Okay, let's take a look at the transports now from a Dow theory perspective. Looking at this, I mean, this faked me out a little bit in terms of, you know, I thought when this broke, we actually had the same signal, a Darvas squeeze long on the S&P, and I thought, okay, that's it. You know, the market's telling us it wants to go higher, and it looks like it wants to go higher. But now what you're looking at is you've got, right now, it's not necessarily a failed signal if it comes down here, holds support, and pushes higher, right? You got a lot of conflicts between these different markets. The Dow is holding support. The Nasdaq looks like it wants to break support and potentially fire a short signal. So I mean, it's obvious we're at really key levels here. And then now you've got the transports fired an initial long Darvas squeeze long signal, and look like, you know, everything looked like it wants to go higher here. At least at the time, not including, you know, this red Hakanashi that came in. And then you've got a potential Darvas squeeze forming on the weekly chart. You know, you've got some warning signs here with the MACD rolling over on the weekly chart of the transports, but I mean, this is really make or break time. You know, I think we're gonna start seeing a pickup in volatility next week, where we're either gonna hold that support and move higher, or we're gonna break it and we're gonna get, you know, some real downside. So next week should be really interesting. I personally don't know which way the market is going to go. If I had to, you know, make a bet on it, I would say I'll wait for the confirmation, because at this point in time, I think it really could go either way. It really could go either way. I'm going to be watching closely those key support levels to see intraday how the market is reacting around those levels, if it wants to hold or if it's going to, break and crack. And to be honest with you, I'm only going to be intraday trading next week, and I'll be taking, the shorter term signals. I'll be taking the shorter term signals to see exactly, I'll be playing the intraday trends. I won't be, being in the market. I think time is risk in these markets, and the longer that you're in these markets, the more risk you have, especially with this kind of volatility. So I'm comfortable, taking intraday risk, but at this point in time, I don't want to have overnight risk or, several days of overnight risk. So at this point in time, I think it makes sense to be cautious and to diversify your trading approach to where you're not, taking risk necessarily overnight when you're not comfortable doing that. Hope that makes sense. Okay, let's see what our friend Vix is doing. Maybe we should give him a nickname like Victor or something. That's not really funny. So the VIX is, let's see what the VIX is doing here. We've got support here at the MACD 0 line at this point in time. It had crossed over here. Okay, we did have a target up here on this last kind of move higher. Right now, I mean, it's really hard to say here, in my opinion. Like this is kind of telling me the VIX wants to go higher, but until you actually get a break of that level, or like here it looks like you've got an 821 crossover, you're above the 21 period moving average. I mean, you've got a squeeze coming into play. Your real Darvis box in play would be this Darvis box range. So this isn't really telling us all that much, although it is telling us that we're going to get a return to volatility, okay, which means we're going to get some movement. So I think understanding where the key support and resistance levels are, and understanding that there is going to be probably a pretty big return to volatility in these markets, we're going to get some really probably big moves in the markets coming up, I think is all we can really expect at this point in time. Okay, I'm going to take a quick look at bonds, not because I really have any recommendations on it, although this is really for educational purposes. I'm not really making recommendations. But the only thing I really want to point out is that look at how bonds are approaching these highs, and they look like they want to break to new highs if they haven't already. On the daily chart, it looks like they broke to some minor new highs. The weekly chart, this is pretty crazy. I mean, if you look at this, we've got a long squeeze on the weekly chart. We have a potential Darvis squeeze taking place where this could push through this Darvis box, and a Darvis squeeze of this magnitude could really push us significantly higher. Now, some of the other traders that I'm talking to, one trader in particular who trades European bonds, he's not a member of our facility, but he's a fellow that's been trading for a number of years, and he's traded for some of the bigger banks. Really nice guy. He comes by Market Trading Concepts on a regular basis, and talks to our members, helps them out. He's just a really good guy who lives in the area, and we're trying to get him in here, but he trades the overnight session. He starts trading at 2 in the morning because he trades the European market. So it's it's not really that easy to for his schedule to coincide with ours. That said, he likes to come in and help us out, talk trading and stuff like that. He's got a lot of experience. He's talking about in the European bonds that he won't be surprised if they go substantially higher, which people are kind of giving some of his some of his trading colleagues are giving him a hard time about. But he said going back that bonds would be where they are now, and they laughed at him then, and look at where they are now. So I tend to believe that he's got something there, and I tend to believe he's probably right. And when I look at the U.S. bonds, the notes and bonds, and I see this kind of action taking place where you've got this kind of sloppy cup pattern, within the Darvis box on the weekly chart, just fired a long squeeze. I mean, these weekly trends persist, and this looks like it wants to roll to the high side. So, the bonds are relentless. I think there's some big forces at play here, and by big forces, I mean governmental forces. that are just, I don't want to use the word manipulation, but they're pushing the market where they want it to go. And I think this is where they want it to go. They want to keep interest rates low, and by doing that, they're keeping notes and bonds high. So there's the 5-year. It looks like it wants to go higher. Fundamentally, this makes absolutely no sense. But the market can stay irrational a lot longer than we can stay solvent. So I wouldn't fight that. Wow. Okay. And I'm only looking at these on an end of week basis because I don't watch the bonds intraday. And this is insane. If you look at the 10-year, look at what the 10-year is doing. The 10-year is, it fired the Darvis squeeze long. You can see here on the weekly chart on my radar screen, it's giving a Darvis long signal. The squeeze hasn't even fired off yet, but this is technically a valid Darvis squeeze where it fired and it has a target of 134 on the weekly chart. So this looks like it wants to roll to the high side. The momentum here is a little bit lower, even though this is a bit of a divergence in terms of we're hitting a higher high, and this the momentum on this indicator is going lower. So that's a bit of a red flag. But the price action is doing what the price action wants to do, and we've got the same signal firing on the daily chart, and you've hit the 1272 extension that we had drawn on this chart. And this is a bit of a red flag where the MACD is here. But from an oscillator standpoint, in strong trending markets, an oscillator can do this in the upper end of its range, okay, for quite a period of time when you've got a strong trend. So the Darvis squeezes on the 60-minute chart seem to be doing really well too in terms of continuation trades in the direction of the trend. So let's just expand out this daily chart and see and see exactly what's happening here. We had this low. This high rather, this low. Now we're hitting the 1272 extension of that move, and then you can see, and here you've got another extension above of the 1618. So those levels are coming into play. Let's see, you've hit the 1272 extension. This was a pretty narrow Darvis box. The 1272 extension came in. The target came in right there at the 1272 extension if you project this mini Darvis box out on a one-to-one basis. So that target has already been met. The question will be, and this is kind of a weird squeeze, right, because the momentum's going lower as it fired, but the question will be, are bonds going to keep going higher, or is this it for them? I don't know. I tend to think that I wouldn't want to call a top or even really make a call in this market. What I think is really happening is, you're getting a lot of divergences in the signals and stuff, in the indicators, I think, because there's something going on here that is not normal. So when I look at this, I wouldn't be surprised to see it hit this. And I also wouldn't be surprised to say, because my fundamental belief is these are way overpriced. There's no good reason for this. I wouldn't be surprised to see them collapse either. So I think it really just depends on where they want it to go, and by them I really mean the governments that are really moving these things. So at this point in time, this isn't a sandbox that I would like to play in. I would just leave it alone and just kind of watch it and say, like fireworks, ooh, ah, you don't know exactly how they work. They look pretty cool. They're pretty crazy. At this point in time, I wouldn't really want to trade this market. Okay, we'll take a look at the 30-year, and the 30-year is coming into kind of the top of its weekly Darvis box range again. It's moving a little slower than the other, the 5 and the 10-year, but it looks like it wants to retest these intermediate highs here. You had a really weird long signal come in because of the nature of the way this indicator was programmed. The Darvis box in play was actually here, and then when you got a squeeze, it looks at the last Darvis box, so it kind of in retrospect fired along here, and it already met its target. So basically what this is telling you is you had this Darvis box in play, and it projected itself out on a one-to-one basis, and it's already kind of done that sort of thing. 30-year looks much like the other ones, although it's not, from price action perspective, not as strong. but it's kind of following in lockstep with the other, with the 5 and the 10-year. Okay, I'm going to jump a little bit forward in the analysis to the crude oil, because the crude oil has been a crazy volatile market. And, like we had support in the market around $100 a barrel. I remember talking to some of the guys here, and we were looking at support of 188, I think was major support before. We've broken through that. We closed at $98.49. But the crazy part about that was that if you look at the daily chart here, look at these two moves. I mean, you had a long signal fire here, a long Darvis squeeze on the daily. It was technically in alignment with this trend. Okay, you were below the zero line on the MACD, and actually the MACD actually just kind of provided resistance from an indicator perspective. But these kind of moves where you have this long signal and it starts to go higher, and then look at this one day where it closed close to the bottom of its range, and then this other day here on Friday where it closed close to the bottom of its range. This signal totally reversed itself, and boom, it hit its target in one day. Now, if you really look at this, these kind of moves are unexpected, unanticipated, and they really, if you're in the moves at the time, they really hurt. That's why you have to exercise money management and risk management in trading. Look at this. This signal came in here. We were trading at $106 a barrel, and then we came all the way down to $98 a barrel. I mean, that is just insane. That's an $8 per barrel move in 2 days. That's crazy. If you look at the weekly chart, you're still kind of against the trend here, but you've got, the MACD's rolled over. You've got a Darvis squeeze in play here on the weekly chart, which could bring you all the way down to $90 a barrel. If this Darvis box plays out, if this Darvis squeeze plays out on a one-to-one basis on the weekly chart, we could still be getting some potential downside in this market all the way down to $90 a barrel according to this weekly setup. Now, that said, I wouldn't want to get short this market, right at these lows and when this target has been met, because it wouldn't be unusual to get at least a little bit of a bounce here. You've got an 821 crossing over here on the daily chart. I don't think it would be unusual to let these come down a little bit and get a retracement. If I wanted to get short this market, I would, although it has been acting as a pure momentum market, from this perspective, these 2 days where you've just gotten these crazy moves, I think at some point, you got to look at the safer entry would be a retracement into falling resistance, and then maybe look for continuation if it is going to continue lower, or wait for a bounce and then look for a break of this level. If it finds support here, look for a clean break of that level, and then look for a potential target of $90 a barrel. I think that, at this point in time, this market is not rational at all. But at this point in time, that's what looks like is setting up. But I really don't like the volatility in that market. There's a point to where markets are good to trade because they're volatile and you get movement. But then you get these kind of moves where they're just crazy, out of control kind of volatility that is really tough to trade. And it's great if you're on the right side of it, but if you catch a retracement on the wrong side of it, even though you're right, but it's outside of your stop parameters, you can really get hurt. So at this point in time, I'm looking at crude oil saying, well, it looked like it wanted to go higher. Now it looks like it wants to go lower. So I think the short side makes more sense at this point in time, but maybe on a decent retracement or on a break of this, this support that might be coming in here where these targets were met around $98. So if we cleanly break $98, then we could probably expect to move down to $90. But this is kind of an if-then situation where if we hold support at 98, then I think that you've held support at 98, and you don't want to try and sell the low tick and then, push higher. So it's a tough place to be. I'll admit that it's a really tough place to be, and I think this market needs a couple of days to prove itself out. I don't think you're going to get continuation moves like this going into Monday, but I mean, stranger things happen, and stranger things have happened in this market. Okay, let's take a look at the gold market. The gold market is in a really, the major pressure is obviously down from an indicator perspective and from a, I guess, a price action perspective. But what I'm looking at here is, one day I feel like the market's going lower, and one day I feel like the market's going higher, and that's really not a good place to be here. And I think what you really need is some direction outside of this daily Darvas box to know for sure. So at this point in time, I'll look at it a couple different ways. I'm looking at this as a potential a higher low, and I thought maybe the upside surprise would be to catch people, boom, break above this, and to really catch people on the wrong side of the market and have an explosion higher. But now we've put in what looks like a lower high, right? And then we're coming back down and testing these lows, these intermediate lows, which could have been this potential higher low area, the swing point area. So at this point in time, and then you have the MACD coming higher. The MACD is trending higher. And then, this indicator, even though it's negative, is trending higher. So you've got, support kind of at your zero line, but it's crossed lower on the weekly chart. If you really look at this, ultimately, what is it? It's just sideways, right? It's really just sideways, and it's in this range, okay, at this point in time. So if you really want to get something actionable, on this market, I think what you really need to do is look for direction outside of this Darvas box. You're in a squeeze now, so you should get a nice Darvas squeeze one way or the other. And I'm just being harassed by my little Boston Terrier here who wants to come up on my chair. Come on, buddy. Okay, apologize for that. So what we're really looking at here is this huge dead zone, okay? And we're looking at direction outside of this massive range. Okay, this is a pretty big range in gold. But I think if we have the patience to wait for it, I think that, we're going to get some movement outside of that range. You're looking anywhere from, 1615 or something, 1615 to 1685 or something like that. So, that's a pretty big range of over 70 points. And I think that's really what's in play. I'm just going to treat this like the dead zone. I want to see it break out one way or the other, and the Darvas squeeze should give us some pretty decent movement one way or the other. If you look at the weekly chart, this is a huge range on the weekly chart. We don't have a squeeze in play, but it's really, it looks really negative, but it doesn't seem to really want to go lower, right? It hasn't really wanted to go lower in a long time, but at the same time, it hasn't really wanted to go higher either, right? So I think direction out of that Darvas box would make the most sense at this point in time. You get a nice Darvas squeeze in there, and hopefully you'll get at least half the width of the range in either direction. That's what I would be expecting. If we look at the silver's sort of in the same position, but it looks a little bit weaker. If you look at the weekly chart chart's just grinding lower, right? You've got the 821 crossover. This is negative. This looks like it's crossing to the low side. I'm surprised the momentum is still this high here on the squeeze. You've got red Hakanashis. This looks like it's just like in this kind of sloppy channel on the weekly chart, and it's just grinding lower. And then you've got all these tails, which to me are signs of accumulation, that keeps probing higher. But it is, in this minor downtrend here on the weekly chart, right? Then if you look at the daily chart, I'm just going to expand the daily chart out here from the Darvas squeeze perspective. What you can see here is, and this is a really messy chart because I've been looking at it a number of different ways. You're getting multiple short signals firing here, but you're not getting a heck of a lot of follow through. So, I mean, if you look at this, like your MACD is basically flat. It rolls higher, lower, but it's basically flat. You're obviously in a downtrend on the on my trending indicator here. Now you've got multiple short squeezes that have fired on the daily chart. You've got multiple Darvis squeeze shorts that have fired. They've taken a long time to kind of push lower. And here we had a push below this low here on, I guess that would have been Thursday and Friday. And, only to see it find some support at, here you had a signal to go short at $29.98. So around the $30 mark. And then it just got bought right back up to resistance here. So the market here, I was expecting a potential, because it wasn't going lower. Last week I was expecting, hey, it's not going lower, so maybe the upside surprise is going to be in play where, people that are short are just going to get, kind of decimated to the upside. And then we just kind of ground lower. We fired a new short signal with a target of, I've been looking at a target of around $29, but I'm the kind of guy who gets really impatient. If it doesn't happen fast enough, then I think the move is over. Originally, I had a target of around $29. This was my original target here, $29 if this followed through. Now, this isn't what I would call a clean follow through. This on the daily chart, I would have expected, this is a momentum setup, and I would expect some momentum behind it in order to push it through and hit that target fairly quickly. It is still grinding slowly towards that target. This is the most boring market that I've seen in terms of the amount of time it's taking to actually play out. At this point, is it going to hit the $29 target? It looks more negative than it does positive at this point in time. But, I wouldn't be taking the short signal at this point in time. We hit it once, we bounced. I would need to see it crash through that level and actually go momentum in order to want to trade it on the short side. Otherwise, I would just treat this as a sideways market until it proves otherwise. I don't really like the price action in these markets. The price action stinks. Okay, let's jump back a little bit and take just a quick look at a couple of stocks. I'm going to take a look at Google first. Here you've got a lower high in place on the weekly chart, and this short squeeze fired. I'm just kind of going back and looking to see, if Google's kind of in line with the market, and it's not that telling. You did have this short squeeze here, this Darvis short fire, okay, and it did hit that target, and now it's just kind of bouncing up, and we're going to see if it's going to retest this or possibly break these lows. Okay, it found resistance here, which is what you would expect, from here's the momentum trade, right? And then here's the retracement, and here's the retracement trade, and it's come off that level. So from the perspective of this, I think right now you want to see some guidance outside of this Darvis box, and hopefully another Darvis squeeze come into play, like this Darvis squeeze fired short, and see if you're going to get something. Now this was a little tougher to trade because at the time, the momentum was still net positive. I think if you get a Darvis squeeze short out of this box, then that would be an interesting short trade to take, either on the break or on the next retracement, depending if you want to try and get on the momentum side or if you want to try and get on the retracement side. The retracement obviously, not always, but in general, I think the retracement is usually the safer trade because it's kind of confirmed, it's kind of showed you its hand. Here you don't know if it's going to follow through. So this is something to keep an eye on as well, because Google is a leader in the at least in the economy in terms of companies that are in play right now. So it's good to keep an eye on these and see what they're doing. Okay, let's take a look at Apple. Apple is still a fairly strong stock from the weekly chart perspective, but I really don't like it. I think it's probably pretty hard to trade here. You can see it started selling off, and then you had earnings. It blew out earnings, right? It gapped higher, and then you can see it gapped higher, but that was its highest price in days. So I think it would make sense for it to close this gap and probably retest these lows at this point in time. I mean, this could have been the move here, but I think you might get a little bit more downside, into, somewhere closer to these lows. So it'll be interesting to see. You've got kind of some support coming in at the 0 line on the MACD. You've got your momentum going lower here, and you can actually see as this is coming down, the volume is starting to drop off quite a bit. I don't usually use volume in that way, although I've been talking to some of the guys who they like to see an increase in volume in the direction of the move. And I mean, obviously I've read about that a number of times, and I've just never really followed it. So, but looking at some of the ways that they look at, the volume picking up in the direction of the trend, they've given me some interesting insights into that, and it's something that now I'm keeping an eye on it, and I'm saying, yeah, let's see if we're going to get a move, let's see the volume pick up. It makes sense the way they've described it. So I use volume in different ways. But that may be something that I start, adding to my analysis, looking at the actual, the increases in volume when the market starts moving cleanly in one direction or another. So Apple itself, I mean, when it gapped higher here, I wasn't too excited about that. It blew out earnings and everything else, and it still didn't retest its high. So I personally think the move in Apple is done. I wouldn't be surprised to see it come down here, at least the move in the short term. I wouldn't be surprised to see it come back down to 526. I wouldn't be surprised to see it come back down here. And that being said, that's what I'm expecting. But I also wouldn't be surprised to see it hit new highs either, because this is a pretty crazy market that we're in. But what I'm expecting to happen is I think the move is done, and I think it's going to come back and retest some more key levels, and I think it's going to come back down to earth a little bit more. I don't think there's anything really driving the increase in the price or the growth of the stock. I think that all the smart money that was anticipating what Apple was going to do, or that knew what Apple was going to do, they've already bought it. They're already taking profits, and I think the move is done. I mean, that's just my opinion. Okay, let's take a look at the U.S. dollar. Obviously, we're getting some pretty schizophrenic moves in the U.S. dollar. I mean, we've gotten some, we broke this wedge pattern. We came back and we retested it, and it looked like the dollar was set to go lower. And then what did it do? It came right back up, and now it's back at the top of this trend line. So the question is, is this the move, and then the dollar's going to roll lower? Or is the dollar going to catch a bid higher and push higher? I really don't like the price action in the dollar. I think the currencies are just playing a dangerous breakdance fighting dance back and forth. Like you see in those movies where the two sides are breakdance fighting and nobody's really the clear winner. And I think what we're really seeing is, we're seeing the dollar trying to step up to the euro right now. And I think that, it's just it's a back and forth. I don't think either one of the currencies, or maybe the powers that be that are driving these currencies, I don't think either one of them really want to see one currency fail over the other at this point in time. And I think that's why we're just getting a lot of, we're getting tighter action, and it looks like we're going to break one way or another, but this tighter action could just be total sideways action. So at this point in time, I really don't know what to think of this. I thought that the dollar was maybe ready to push a little bit lower, and as soon as you think it's going to push lower, breaks these lows here a little bit, and then it pushes significantly higher. So this is a really tough market to trade. I think because we're in one of these zones where there's a tug of war happening. You're really getting a lot of just back and forth volatility, and at the end of the day, you're ultimately just reverting back to the mean, back to the average. You're not really going anywhere either way. The best way to trade these markets, I think, is on an intraday basis, and try to catch, like when you get some strength, try and catch a little bit of strength, but don't be married to the position. Try and catch a little bit of weakness, but don't be married to the position, and try and take, some profits, and, just play the short-term ebbs and flows of these markets until they really tell you which way they want to go on a swing trading basis, one way or the other, if they do for some time. I mean, I really don't know at this point in time. where they're going to go. I thought they were just getting ready for some big moves. The price action's getting tighter and tighter, and I'm expecting, or I was expecting, a break one way or the other. But till that happens, you're just getting a lot of sideways volatility, really. Okay, let's take a look at the euro. So the euro, is the same situation. We were testing that 130 level here, and we had an initial probe which triggered a short squeeze, Darvish short. And on the weekly chart, we didn't follow through. You've got this kind of wedge pattern taking place here too, where you've got a trend line here, you've got probably a more pronounced trend line there now, and the question is it going to break one way or the other, right? And then on the daily chart, you've got here, you had a long signal, and now you're back into this range, you're in a squeeze. I think you really need to break a much wider range here, and I think that the weekly chart is really more telling of what that range is. So anything in this range here, if you can intraday trade it, that's fantastic. It's a huge range of $1.30 to $1.35. It's a 500 tick range. You can probably catch the ebbs and flows like this and like that using intraday charts, and then take your profits and get out. But from a swing trading basis, I think you're just in this huge dead zone, and I think it's better just to either short-term trade it or just to leave it alone until it really confirms itself one way or the other. Okay, let's take a look at the Australian dollar. I personally don't really like this. You're seeing, 1 week you've got a long signal here. The next week you've got a short signal here. It's basically just going sideways, and it's faking people out on both sides. I really don't like this at this point in time. Ultimately, it might go lower, but when I start seeing, this kind of price action, that is just, it's probing up here, it's probing down there. At some point, you just got to walk away from it and wait for it to trend, and then look at, buying the pullback in the trend. Selling a retracement, buying a pullback. This kind of volatility is just killing traders. That's all it's really doing. It's just killing traders. And, it just doesn't really clearly know which way it wants to go. And maybe it just wants, it's just picking pockets on both sides. So at this point in time, we have a short signal in play. That said, we had a long signal in play last week. At this point in time, I'm just leaving these kind of markets alone. Okay, looking at the British pound, I do like the British pound on the long side. It did fire a little bit of confluence between the Darvish squeeze on the daily chart and the Darvish squeeze on the weekly chart. Now, the thing you have to be cautious of here, and I think we talked about this last week, is the overall craziness of these markets, the volatility, the lack of direction. But it hit the target here on the daily chart, and now it's coming back into support. So do I think that this would be a good support level to buy? Yes, I do, because you've got some pressure on the weekly chart and everything looks good. So what I'd be looking at potentially is a pullback to the 21 EMA or somewhere in this area, and then look for signs of strength to buy it back on the way up. You don't want to just buy it here only to see it crash through and fail, like on some of these crazy markets we've seen. What you want to see is an actual, you want to peg a level, see it hit that level or come close to it, and then show signs of strength that it is actually going to resume the trend. So once you're able to drill down to a lower time frame chart and see some trending take place on that, then I think it makes sense to get in on the long side once it's kind of confirmed that it's hold support, and look for a retest of those highs and possibly a break of those highs. Take some off here, and then look to see if it will, tighten up your stops, lock in some profits, and then look to see if it's going to follow through to the high side. So it still looks decent, but we've been getting a lot of ridiculous reversals in this market. So at this point in time, I'd be a cautious long on the British pound. Okay, I just skipped over the Canadian dollar. I'm not really even interested in commenting on it. I'm not even that interested in commenting on the Japanese yen. I did initially like it as a short. I've been talking about it for, a couple of weeks, that if we got a retracement back to this level, that this might be a good opportunity to get short. Perhaps we've hit the level in here, but I don't really like the price action for a short right now. So what I'd really need to see is a failure on the daily chart in order to say, okay, that's it, that's the zone, it's going lower now, and maybe taking an entry based on the daily chart, and then even drilling down lower to a 60-minute chart, and even lower. I'd like to see it fail this 21 period moving average. It actually looks like it's building constructive uptrending on the daily chart now. So at this point in time, although it's hit the levels, it's not looking like a good short until it actually proves itself as a short on some of these lower time frames. If that makes sense, I hope it does. And I'm just going to whip through the grains here. I'm not even going to pause the video in between different instruments. The corn looks sideways to me. Looks sideways. It looks like it's building up some strength, but I'm not really that interested in it. I think it's probably a better intraday market where you can catch the intraday trends. Like look at the 60-minute charts here where you get this volatility. Those are some big point moves, and I just don't really like it. I think the corn is sideways. The soybeans have exceeded my expectations in terms of how high they were going to go on the weekly chart. It hit this resistance level. It even went higher. Now you're doji on the week. I wouldn't be surprised to see a pullback. Here you had a pullback on the daily chart. Be interesting to see if this pullback is going to hold and we push higher. Although I think this is looking really toppy, anything can happen, right? This is a valid pullback unless it fails. So the soybeans are still pretty strong. You had a couple of days of downside. Your doji on the week here. I don't really like the upside at this point in time, but a trend is your friend until it ends, as they say. Let's take a look at the wheat. The wheat is firing short signals and is firing long signals on the daily chart. It's fired a short signal on the weekly chart. I really don't like the price action. I think it's very just volatile within a range. And I think it's, if you're a breakout trader, it'll take you to the long side, it'll take you to the short side, it'll just chop you up. So at this point in time, I would just leave the wheat alone unless you get good intraday signals that you can be in it on the short term. I personally don't like the leverage in wheat. I think it's a thin market as well. So I don't even really trade it. I'm just looking at it from the perspective of, is it in line with the corn and the soybeans? Does it look good? I really don't like these charts. I would stay away from it altogether personally. Okay, so I hope that helps. Hope you all had a good trading week. I'll look forward to seeing you either at the next video, hearing from you by email. Also, I just want to throw the idea out there. I'm going to be doing some traveling close to the end of the month, so I probably won't be able to run the meetup on the last Sunday of this month. However, I'm considering running it 1 week earlier and continuing on past the last topic, technical analysis part 2. So what I'm actually looking at doing is holding it the third Sunday of this month, and running it a week earlier because I won't be able to run it the last Sunday. I'll be traveling. So that said, I'll update through the meetup. If you're not a member of the meetup group, you can find it from our website at markettradingconcepts.com, and you can you can join the meetup group to stay informed of when the meetups are going to happen, and what dates, if there's any date changes. So I hope this video helped. I'll look forward to seeing you all, and good trading going into next week. Just be very careful. These are pretty crazy volatile markets. Keep your risk in check. Manage your stops. Manage your money. And if you don't like what you're seeing, there's nothing wrong with just standing back and letting things unfold a little bit until you actually are more comfortable getting into the markets. They've been a little bit disorderly, however you want to say it. And I think it's because we're at some pretty key levels, some key inflection points, some key support resistance levels in certain markets. So, nothing wrong with being cautious, nothing wrong with, maybe not being a swing trader right now and looking for intraday opportunities, day trading opportunities. So I hope that helps. I'll look forward to seeing you at the next video. Take care. Have a great week.